Welcome back to another episode. So the market went down last week. It had a slight pullback due to valuation concerns plus AI stocks actually paying out. This was just short-term emotional trading, and now we're seeing it rebound after the government shutdown could be put to an end. During this time, we saw the U.S. government bond 10-year yield increase, as well as a large spike in the VIX. As of now, European stocks are up and almost reaching that all-time high, and Japan stocks are lagging slightly behind. So this week, the market is reacting very positively to this news. The government shutdown is on track to end soon, hopefully. The U.S. Senate voted on November 10th to pass a funding measure and send it to the House of Representatives, where it is expected to pass. Who really knows? After that, it will need approval from President Donald Trump. This is definitely not a quick process, and it takes time. There's multiple different branches that needs to approve this funding. This has been one of the longest government shutdowns that the U.S. has seen. If this funding bill does pass and the government is back on track to reopen, the first to return is this jobs report, and then the CPI plus PPI, retail sales, and then GDP. Bull case, all of these numbers come out very positive, and the market loves it and reacts very positively to it, making an all-time high. Base case, which I think will likely happen, is that some of these numbers are going to be lagging, and a slight pullback will probably most likely happen. And then bear case, all of these numbers are terrible, which could definitely happen, and the market reacts very negatively to it, and a more larger pullback happens to the market. Either way, this is definitely signs of improvement. The market really hasn't been reacting that negatively to the government shutdown, but I think when it reopens and these numbers come out, the market is going to react very heavily on these economic metrics, and whether they come out positive or negative, the market is going to react in that certain way. As we start to reach towards the end of 2025, and the holiday season starts to arise, Walmart is definitely one of the best retail stocks to buy and add to your portfolio. About a month ago, Walmart released this partnership with OpenAI to create AI-first shopping experience. This has not been seen in any retail company before, and the partnership will actually allow customers and members to complete purchases from Walmart directly within ChatGPT. ChatGPT is slowly becoming one of the biggest search engines, almost completely taking over Google search. This partnership builds on the multiple ways Walmart and Sam's Club are already using AI, like enhancing product catalogs, improving customer care resolution times, and promoting AI literacy among associates. There is absolutely no doubt that once this OpenAI application actually comes to tuition, this is going to boost sales incredibly for Walmart. AI is such a growing space, as I've explained previously on this channel, and for your company not to invest in it is such a terrible idea. You want to adapt to it. It's going to become the future. In terms of Walmart, this is absolutely a great deal and will definitely boost revenue for years to come. As quarter four reaches and the holiday season starts to arise, I love looking for retail stocks that are strong in growth, somewhat low valuation, and has great profitability. Walmart fits this, and many analysts are actually estimating that this is going to be the first $1 trillion holiday shopping season. That last quarter, for any retail stock, but primarily Walmart, they see such a large spike as many consumers are spending a lot more for the holiday season buying presents and gifts. Walmart has a considerable amount of market share in the retail space. Walmart owns Sam's Club. They also have international Walmart locations, as well as domestic locations here in the U.S. In terms of their valuation ratios, their forward PE 39.25, but definitely justified. Very strong current earnings per share and very strong earnings per share growth in the future. Price to earnings ratio regular is 38.7 times, a little bit larger than what the average is for the S&P 500, but also still very much justified. From 2020 to 2025, Walmart has been able to increase their total revenue year over year. And if we actually look at their revenue by each segment, most of their revenue is coming from net sales. Very little of it is coming from membership / other income. Their net income from 2020 to 2025 has been a little spotty, but from 2023 to 2025, we can see that they've been able to start to grow that back up to a higher level and actually making a all-time high in 2025. Their earnings per share has also been a little spotty from 2020 to 2022. They saw pretty good and high numbers, and they saw a very large pullback, but from 2023 to 2025, they're starting to rebuild that earnings per share up to that level of 5 and 6. And then year over year growth, for looking at net income year over year growth, they've seen pretty considerable pullback, and this earnings per share decrease in 2023 can be attributed to a lackluster year in 2023. They saw negative net income year over year growth, but their revenue year over year growth has been pretty strong, around that 6% level. Gross margin is considerably strong, average around 75%. Taking a look at cash flow on an annual basis, from 2021 to trailing 12 months, they've been able to increase their free cash flow pretty considerably, reaching the billions. In 2024, they kind of had a lackluster year, a negative 16.27% decrease, but trailing 12 months, they're certainly not lagging on their free cash flow. Walmart does a great job at, reusing this free cash flow in favor of investors through a very strong dividend, as I'll show, and through a pretty strong stock repurchase program. Walmart's dividend is definitely a great factor of owning the stock. Right now, the dividend yield's going down. That's just due to the stock price increasing. So the dividend yield's at 0.89%, and the dividend per share for 2024 was 0.83 cents. You definitely own Walmart for the future growth. The stock price is going to rise considerably. Another great feature of owning Walmart is this strong dividend. If we look at Walmart's enterprise value, which, if you don't know, enterprise value factors in cash and debt and really shows the true value of the company, it's been growing pretty considerably from 2013 all the way to currently, which is now at $880.98 billion. For retail stocks too, it's very important to look at their inventory turnover. They're doing a great job at increasing this number. Currently it's 9.25, and around 10 years ago it was 8.06. So they're doing a good job at turning over that inventory. Walmart, during this tariff hit, basically confronted President Trump in the White House and said, hey, we're going to increase prices. This is affecting us. Walmart did that. They really have not seen a decrease in their revenue because they were still taking on considerable inventory, as many companies were kind of trying to hold on to this inventory to reduce costs from the tariff. But Walmart had a different idea, and it worked out great. And yeah, so they're able to turn over their inventory pretty considerably. 9.25 is that number. Looking at Walmart's forward revenue growth, they're at 4.68%. Sector median is 2.79%. A lot of retail companies have actually been struggling, like I explained, due to the tariffs and the large cost of inventory, as well as, consumers spending less with this harsh economy we're currently dealing with. Walmart's done a great job at retaining customers and still showing strong signs of future revenue growth. For a very mature company like Walmart, I'm not expecting to see super high numbers like 50%, but 5% shows that they're still able to increase their revenue year over year and still retain and grow their customer base. Now, their earnings per share diluted growth forward is 9.86%. The sector median is 5.81%. So they're doing a great job at starting to increase their earnings per share diluted. As we saw, there was a slight decrease in 2023. Ever since then, though, they've been doing a good job at rebuilding that earnings per share, which really drives, the stock price up. Being a retail company, it's important to bring new products in and showcase them effectively. Walmart does a great job at that. This is just a few examples, but they bring in a lot of new inventory, whether that be new Christmas items, Halloween items, whatever it be. They bring it in and they do a great job at showcasing this inventory, grabbing people's attention, and really, finalizing that sale. Walmart has also undergone this huge store remodel program, remodeling many stores, making them more sleek and better to consumers. This has increased their spending, but I think this will pay out in the long run. It's also important to note that Walmart's e-commerce has grown considerably over the past 10 years, and a lot of their sales come from online. Overall, from the analysis that I conducted, Walmart is definitely the best retail stock right now in the market. It's not too overvalued. The price to earnings ratio is clearly justified. The fundamentals are great. This new deal with OpenAI is going to boost revenue considerably, as well as remodeling their stores, increasing their e-commerce revenue. Overall, this is a great stock to buy and hold for the long run. If you haven't already, definitely make sure to go check out my Discord. I post my recent trades, my closed trades, what I think about the market right now and the future of the market, any new stocks that could be worth buying, and it also offers a community chat and is completely free. As always, thank you guys for watching. Stay tuned for the next episode. Make sure to subscribe, like, and comment.